professionalinvestor.com's daily brief. The answer to your question is learn the goddamn process, trade your trading plans, don't take too much risk on any one trade, and just let yourself get rich. Hello, everyone. Happy Tuesday, 29th of August. Hope things are treating you well around the world. Coming into the end of the summer here. It is Panacook Tuesday around TRI. So in the after party today, we are going to have TRI CTO Sjord on the call. Talking a little bit about site development. We've had actually a big event here today. The team has been working away on building a new sort of front-end website to more appropriately promote the TRI message through the whole summer. So they're finally decided to go live today. The question, of course, is Sjord as CTO is going to sort of keep an eye on everything, and hopefully everything integrates well. So he is very, very busy with all of this. So I'm not quite sure what report we'll get from him today, but I'm sure whatever he contributes to the conversation will be much appreciated. And I suppose, we did have a big SEC court sort of head-to-head with Grayscale, the people behind GBTC. And I get the impression that the SEC kind of got punched in the nose here today by the courts, which is a great testament to the United States of America. I've said repeatedly, I'm very bullish of the USA and the U.S. currency for the next while. I wouldn't even be surprised if Bitcoin is even tied to the U.S. currency now. But interesting to see. It was like, it almost feels like it was like a program trade or something that kicked in here this morning. We've been talking at quite a length about if we look at the Bitcoin chart itself, I just got to make sure I'm on the right tab here. You can see the whole damn market just lifted. All the currencies, the gold, well, even oil caught a bit of a bid there. Stock market caught a huge bid. Even the bond market rallied smartly. I mean, the whole market rallied. The only thing that came off, of course, is sort of the anti-risk proxy, the US dollar index. It got whacked here this morning. It's interesting how we were kind of contemplating recently that the US dollar index had to do some sort of bearish move down against these lows. But it was, as soon as this sell-off sort of started in the US dollar index, like I said, euro, yen, Aussie, even the Canadian dollar for that matter, Swiss franc, huge bid. Something hit the market. I don't know what the hell it was, but something hit the market. It was fortuitous that the Bitcoin news about the GBTC hit the market almost exactly the same time as this program buy order. And you can see, it wasn't just Bitcoin. If it was just, this was just GBTC and the SEC and stuff, well, you might have seen the Bitcoin rally and of course GBTC do well. But you can see the whole, the total market just launched here. Of course, people in the TRI room here this morning were very happy, seeing a whole bunch of names all zoom up. I think, if I'm not mistaken, a name that Sjord likes quite a bit. Yeah, his rune, it jumped up about 5%, 6% here this morning. See, but it does look like maybe the euphoria, whatever that initial move is, it's kind of waning a little bit here. You can see things are starting to sort of, okay, we're not absolutely insane face rippy uppy here now. But nonetheless, it sure felt like a big buy program just kicked in right across the board. So Why? You know, I think, with regard to Bitcoin, I don't know whether the broader market was the same or not, but with regard to Bitcoin, we've been talking quite a bit about this for the past week or so. We did come down into a very acceptable trade location. Wicks and tails like to be eaten, candle body lows for trade location, trapped bears need release. We've had lots and lots of conversations about this. And if this is indeed a fractal, and I've shown you like pictures of the maple leaf and that kind of stuff, then we should have expected some sort of bounce here. And as you can see, I had labeled that this big fat round number and the tail low. This was the Peter Fink ETF low. Interesting how as soon as we talk about ETFs, all of a sudden the market seems to catch a bit of a bid. But that sort of represented support on the Bitcoin chart. And then we had three different moving averages here that to me represent an absolute brick wall of resistance. And just sort of in between these, it's almost like an air pocket. And if we look at the lower time frame charts, this is the daily chart now. Again, you can see support, resistance, and we just were banging around, smush all of this. This is a really good example of candlestick math, where you smush all of these candles all together. And if you made one candle, let's say like as of yesterday, all those candles smushed together just created a doji candle. So, it's actually kind of normal. In fact, I was even pointing out like on the lower time frame charts, you can see it here. But if you look at it on say like a 4-hour chart, this is what's called a diamond pattern. Pretty normal. It's business as usual. We also pointed out that we had like 3 or 4 different candle body lows for trade location. Wicks and tails like to be eaten, candle body lows for trade location, reload zones. I mean, it's just sort of, pretty cliche stuff. We actually put in a bottom yesterday, which was interesting. I had noticed this yesterday. We did actually break out. This low here is higher than this low, and this high here is higher than that high. And then we just sort of went sideways. This is a 4-hour chart. So for 1, 2, 3, 4, 5 bars, or basically what's that, about 20 hours, we were just humming and hawing, humming and hawing, humming and hawing. We can circle back around to so what some of the econs were reporting here. I will say that Sunday evening, and I suppose through the weekend, probably was planned at the end of last week. We had talked a bit in these public shows about China and how China, things are looking pretty grim over there. And I think the CCP themselves even sort of acknowledged how bad the situation was and how this thing was threatening to roll over. The Hang Seng itself did break recent lows. So China actually came out over the weekend and announced they put like a tax on every single transaction in the stock market. I think they call it like a ticket charge. I can't remember the name of it just off the top of my head. And they reduced that I think by like 50% or something, which gives the stock promoters a little bit of a boost. But I don't know whether it's like underlying econs going to help. But the scuttlebutt, the talk was that the Chinese were actually making active measures, especially probably when they saw this Hang Seng break down through these key lows here. They were going to actively step into the market and actually promote the stock market over there. So that might be one of the sort of catalysts that got this thing going. Obviously, that's not really the most impressive of charts there. And I certainly don't have any buy signals, but how do you explain some of the lift of late? The scuttlebutt is that the Chinese were sort of, in there actually actively defending their stock market. So we'll see how that plays out over time. If we circle back around to sort of the regular routine, unfortunately, I had a very bad night. And I suppose as you get older, these things happen. So I really, past couple of days, I've just been completely MIA and very stressed out about life and all that kind of stuff. So I was totally out of it this morning, which really sucked because I actually even noticed after the fact. I had gotten up like through the night. I couldn't sleep and I was looking at the screen, but I have strict rule. I'm not allowed to trade unless I actually go through my full routine. And you can see how crude oil market had come up against some interesting levels here in the overnight trade. And I would have been interested to take that short. And actually, this is what the short actually looked like. It was a pretty trade. So that was right up into that level. We got a bunch of bear divs and momentum, had a beautiful M top, and the market just completely collapsed. Just even the move back to the VWAP was 2.5 to 1 risk reward. But I missed the trade, so can't do anything about it. But a little bit frustrating. Then just walking through the market here. As I said, and I actually like to include the Bitcoin chart now in this sort of matrix. So this will be an image that was earlier this morning in the crude oil market. You can see that as the morning developed, the crude market came all the way back down into key support, and now we're rallying right back up top. But if we look at some of these other markets, like the gold market, for example, we've been talking recently about how there was a B, C, D bullish bot. Didn't really set up levels to actually take the trade very well, but that doesn't mean anything. The market looks like it wanted to complete this A, B, C, D, and lo and behold, here we are. So believe it or not, actually now with us coming up into bot objectives, 200 SMA, trendline resistance, ATR level, I can actually start justifying hunting shorts coming in now. And, like we'll get to it in a second. I'm not overly convinced that the Econs, I think this was more just like there was a program trade that kicked in. And I think there was actually a lot of like sort of short covering. Remember all those key reversals that we saw last week? There's that crude oil market. Again, this isn't really the hallmark of a huge bull market. So it's not really anything in crude that's driving this. In the stock market, just looking at the ES as a broader measure, we had this sort of meltdown last week. Was it more to do with options and options expiration? I don't know. End of summer, very illiquid markets. And actually, if you're going to like learn something from these videos, notice how this AB equals CD, it actually set up an inverted head and shoulders right off of that level. Then it came back, then it oscillated. Look at this one candle. Basically, its high was this ABCD objective. So I get the impression, and I see this happen quite a bit, that the market really wanted this sort of 44.30 level, we'll call it roughly, on ES, and it was just trying to figure out its footing around here. Notice if we did like a measured move from say this low back up to that high, oh, what a coincidence. We basically replicated that up here now. So kind of like the gold, if we did like a reload zone off of this particular range, that's probably right up in here. Horizontal support and resistance, 200 SMA, trend line resistance, ATR levels. And I think that this AB equals CD, if I measured it out, I didn't have enough time to do that before the show here. Like I said, I was totally MIA for futures trading this morning. But yeah, I think you can make an argument that we're coming up into an ABCD objective there as well. So I don't know. I don't know whether it's a good idea to get all wrapped up in that. Oh my God, this is a new bull market. We're all going to the moon. And this seems to me like there's more technical than anything else. And actually, ironic enough, the Bitcoin chart, I think, actually really articulates that well. You want to see something really cool? Is if we go and look at the Bitcoin futures chart. I thought this was really impressive. So here is the futures markets. And if we pull up the daily price chart, can you not see that head and shoulders pattern? So left shoulder, neckline, head, right shoulder. So really, I don't think that this is really shocking what's happening here. But is that the start of a new bull market? I don't know. I get this is an illiquid summertime market. And I think the market was just sort of desperate for some sort of news to relieve this very negative sentiment. Like I said, I mean, we had, geez, the system must have spat up like 10, 15 different bearish key reversals through last week. The interesting thing about this chart, which surprised me, is you can see this was actually a bullish key reversal on the daily Bitcoin futures. You can see it right there as plain as day. And that key reversal bar is this diamond pattern. So the futures markets, they opened up lower, closed higher. They painted that bullish key reversal candle. And in an interesting way, this took basically about a week or so to fire. And that's what sometimes happens with these key reversals. So this took 1, 2, 3, 4, 5 days to fire, but that be a bullish key reversal signal has now fired. So I get the impression that this was nothing more than market came back down into support. And if we are carving out this big honking fractal, that you should have expected some sort of turn here. In fact, I got to say, to be perfectly honest with you, this was actually quite FU free. There was only one FU move here. Actually, I'm actually a little disappointed in Mr. Fink. Only one FU move? Come on, what are you, lightweight? So anyway, it is what it is. So it's encouraging to see. And I think probably now, we'll go through sort of they've now and again, I don't think we've actually broken out here. All we've done is just rallied right back into resistance. You might find that this is an AB equals CD, which takes us a little higher here. But my hunch is probably through the rest of this week, we kind of do a bit of backfilling, and maybe coming out of Labor Day. I heard interesting conjecture. I heard that Mr. Prigozhin might have had a 100,000 Bitcoins. So I'd be curious to see whether you actually hear any scuttlebutt about Prigozhin Bitcoins hitting the market. Oh, sell. Anyway, actually, a couple other things that really jumped out at me today that were super cool. If you do play the penny stock market, I noticed that some of these little guys are starting to look really interesting down here. And there was one, I don't know whether you can buy this one or not, but it is OTC. So you have to be careful with that anyway. Look at where the 200 period moving average is on this thing. The stock's 17 cents and the 200 SMA is sitting at $1.50. Has this thing got any room to come back here? I mean, obviously these, they're kind of fun charts to look at, but look how much this thing has come off. So, well, that's an interesting looking W, isn't it? I mean, W's are W's are W's. So, but right across the board in crypto stock land, things are looking a little better. So, got to feel pretty good about that. I was looking at things like Hut this morning, and basically worked his way back down to a Wyckoff check level. So, on balance, I wouldn't fault anybody who is interested in this. And you can go through the whole list. Maybe we'll do that in the after party, but some interesting names. So, I think a huge part of this is going to be the tech reflation. There goes NVIDIA. I think I saw Tesla was starting to work its way back up. It still has a weekly bearish key reversal working. So I don't know whether I'd be too interested in something like that. But, a stock that nobody's been talking about. And yet I do see on like I've got one of these big, I think it's called Roku or something like that on the TV, and it's integrated with the YouTube. And now YouTube, they've got these commercials really, really slick now. So basically, Google has turned YouTube into basically like a TV broadcasting platform. And I would imagine their revenues from that are just going to go insane. And when I looked at Google, I was like, oh boy, look at that. So he's breaking out to new highs and very quietly too. So I have a funny feeling that's a big reason why you're seeing the tech stock zooming up. And if I'm not mistaken, I think Google is reporting here soon. So we haven't talked too much about Google in the past little while. Maybe we're a little overdue there. What are the reasons that they're justifying the rally? Obviously, as I said, a huge part of this was that whole idea that the Chinese were going to come in and sort of try and prop up their markets and government direct intervention. If we go to the news rags and sort of what were the fundamental drivers today, everybody's been, of course, whoops, that's school stuff. All right, so that's probably I think I talked quite a bit here, so I'll probably just wind this up here. Where that was the, oh yeah, well, I guess this was the screen I was supposed to be on. News, as we said, the GBTC news caught the market pretty well, but econs wise, everybody was waiting on this JOLTS reports, and the Fed and Chappelle, he's even made reference that this sort of job openings data point, you can see it's even in red now. Ooh, it's super important. And people were kind of, the Fedsters, the people are trying to slow the inflationary pressure down. They were kind of hoping to see this number start to come back down to earth. So I think the market got quite a bit of a boost from the fact that that number was quite a bit lower than expected. But at the same time, too, I look at some of this data and it's not something to be like overly excited about. If we actually look at the actual data itself, actually, well, this will work. Consumer confidence. Look at consumer confidence was off 10 points from expectation. Now, how on earth is that bullish? That makes no sense. The home prices are falling, and I think they were kind of expecting them to be falling. And if anything, this is good. This is healthy. This is normal. You never really want to have a one-directional housing market. Look at my country. I mean, were we going to be able to get through a broadcast without Brian bitching about substitute drama teachers? Unlikely. So, you see what's going on in Canada in the housing market. That is a textbook way not to run an economy. That's got bubble written all over it. It's exactly like 2007, 2008 down in the States. And as soon as these mortgages start getting refied, the fucking shit is going to hit the fan in this country. But so what? Who cares? This, ironically enough, actually, the US housing market is calming down. And I'm hearing a lot of talk about things like rents and prices and stuff are coming back down. And if you don't want to live in a fancy schmancy area, you can actually move to like rural Illinois and actually buy a single family home for $100,000, $200,000. I mean, very realistic numbers. So, I've said this repeatedly. The United States of America is not where the problem is in this world. The problem is in the commodity countries, in that stupid idiot farce of a nation that was, totalitarian dictatorships artificially propping up their real estate market into the point where it's all just a big facade. So, yet again, I actually think there's more case to be made to be bullish of the United States of America relative to the rest of the world. So, but at the same time, too, can I justify a whole brand new bull market looking at consumer confidence getting whacked here? I don't think so. And this isn't really a really overly bullish commentary. If anything, it's kind of like, okay, ideally in the market in years gone by, we always used to use the term, it's not too hot, it's not too cold, it's just right. It's the Goldilocks economy. And that's what really these banksters and stuff are always shooting for. They're shooting for that Goldilocks economy kind of scenario. And I get the impression that we're not going absolutely apeshit crazy here with the econs. If anything, things are calming down and just sort of, just okay, we were at a fervent boil there, and now we're just back to simmering. But there are no bubbles in the United States like there is in substitute drama teacher, whatever the fuck that guy's name is, land. So the final piece to the puzzle, and keep in mind, actually, even if you just sign up for the 30-day trial, you do get to see this. So I don't really mind. We don't really talk too much about the crypto signals because that is behind the paywall. But interestingly enough, you can see the S&P 500 has now crossed on our breadth indicator. I think Julian has gone out of his way, and probably in future broadcasts, I'll show you this sort of performance data that he has backtesting this using either leveraged ETFs or just buying the spot market. And the returns are stunning. So at the very least, this is a message that we should respect. Something is changing here in the broader market. We talked about this when the fast was down here below 20 and we were getting oversold. We talked about how the country funds were getting completely wiped out, and that's one of your tells that you got to watch out for, that we're probably near some sort of pivot in the market. When we go below 80 and below 80 on both of these, pay attention. Usually what happens, well, not usually, we haven't been running this that long, but what I found in my experience over the years is usually we have the country funds and the S&P also go oversold. We never did get the S&P go oversold. So I don't know whether I'm actually considering this like a monstrous buy signal, or it's just simply, if you look at the stock market, like I had showed you there earlier, especially if you look at something like the daily charts, I think and really Bitcoin, same thing, is we were at the bottom end of the range. Now we're probably going to go right back up and revisit the top end of the range. I mean, it's interesting to see when we look at the stock market, the legacy markets, they're not really actually doing much. 0.75% move, actually 2/3. It's okay. Remember, we said the magic number for you to really pay attention is if you see a market move more than 2.5% on a day. So you can see the tech stocks are on fire here. I hope that's not a harbinger. But I think we even talked about this before, that now this double bottom is firing here. It was interesting how we had this double top fire and bang, we slammed into 2.618s, trying to put in a downside reversal. And the interesting thing about this is not a key reversal. So that's fascinating how that happened there. It's an engulfing bar. And had you taken the engulfing bar signal, you would get stopped out on a break of this high. It's interesting how we have not broken that high. I'm sure they're going to go after these stops here. But that is 15,417 3/4. And if that is taken out, then Foggenbaum's, just like you see here, 2.618. I think we're heading up top here. And, judging by the fact that nobody's really talking about Google much these days, and Google is quietly breaking out to new highs here, you might see some fireworks around that. And of course, like we said, Tesla is perking up, Nvidia is perking up. So all these damn tech stocks are getting ready for another big move to the upside here. So that seems to be the driver of the market. If you happen to be in the AI industry, you probably should do pretty well here. And social media is just going to continue doing its social media thing. Like I said there a bit ago, I'm actually starting to see smatterings of, it's still a little bit early. September, October is usually the worst performing month in the stock market. It might be an idea just to cool your jets here through this, but actually this was one that was a really popular one. Last cycle, you can see the nice bull run there through the summer. So they are starting to try and turn the corner here. Actually, Novogratz, we probably want to keep an eye on him. You can see there's big fat weekly W's. This isn't a bad place to pick some more up. You can see I was buying off of this. So, it's encouraging. We'll see how this goes. But I guess the way that I would sort of, in summary day, felt like the market was maybe a little bit sanguine, a little bit. We had all of those bearish reversals all late last week. They didn't really follow through this morning. The Chinese publicly came out and said that they were going to start defending their stock market. And we don't really have any, if anything, I think the way that I would describe the econ news here today is this is a good example of what's good for Main Street is not usually good for Wall Street. but what's good for Wall Street is not so good for Main Street. I think I got that right. So sometimes you get a situation where good news is bad news, and that would be sort of like, hey, look at Main Street, look at all the jobs, look at all the prosperity. Oh, geez, the Fed's going to have to raise rate, dumps the stock market. But sometimes you have a situation where bad news is good news. And that's how I would probably describe today. Because when you on first blush, you look at these econs, they're not anything to get excited about. But I think the way that you interpret this is, well, if the Main Street is calming down, then that means that the Fed can calm down, which means that maybe if we're lucky, we're raising interest rates and the stock market could just go back to being an earnings conversation. We don't have to worry about interest rates anymore. Anyway, we'll see. And also, too, in the end of the summer here, very illiquid. Most people that actually really are professionals, they're not around right now. In fact, I was even debating whether I'd even want to get up this morning, considering I had such a terrible night last night. But nonetheless, here I am. I've given you my report. I hope you got some value out of that. And now let's go over and hang out with Stuart a little bit in the after party and hear a little bit about site development, new websites being launched, and what he's seeing over on his side of the pond. All right. Have yourselves a great day. PMA for the win. All the best. Hugs and kisses. And the only thing left for Brian to say is bye for now.